Hey, how's it going, everybody? In today's video, I'm going to be talking about trailing stop losses. I'm going to be talking about what a trailing stop loss is, how to use it in a buy or sell order, and also what kind of effect a trailing stop loss can have on your trading strategy. So we'll take a trading strategy that is otherwise profitable, add trailing stop losses to it, and see what that does to the outcome of the strategy. Trailing stop losses are one of my favorite ways to enter and exit a trade, but I get a lot of questions about them and I see them often kind of misused, and they can be detrimental to your trading success. So this video is not intended to be financial advice. And when we get into the back testing, just remember that any back testing is based on past performance, and past performance does not guarantee any future results. And if you like this sort of content, make sure you hit like and subscribe to the channel. It really helps out the channel a lot, and I really appreciate it. So first thing we'll talk about is what is a trailing stop loss. And a trailing stop loss order works just like a stop loss, except that it's moving with the price of the stock. So a stop loss order basically sets a limit at which if the stock goes below or above a certain price, you're going to execute a buy or sell order. So the difference with a trailing stop loss is you see that it's moving up with the price action. So on this little chart here, when we bought at $20 and the price moved up to $22, if we set our trailing stop at a $1 below, you see that's number 3 here. That's just staying $1 below the highest price reached. If we don't go below that, then nothing happens. But if the stock price goes up, then the trailing stop's going to move up as well, as you see in number 4. Now, when the stock hit $24, that was the highest point, at least on this chart. And so with a $1 trailing stop loss, our stop loss was set at $23 at 0.6. And once we went below that, a sell order was executed and we were out of the stock. Now, you can also use trailing stop orders to buy a stock. So as the stock price is falling, your trailing stop loss is coming down with the stock price. And then when it goes back above that, it's going to execute a buy order. So what I want to do now is just jump over to TradingView and I'll show you a couple examples. And in this example, I'm going to use SOXL. And SOXL is a 3x leveraged ETF fund that follows a semiconductor index. It's one that I'm pretty bullish on right now, actually. And so let's say here on 20th of May, we were trying to enter a trade. And so we knew on this day that we wanted to enter a trade. That could be because of a trading signal we got, or maybe we did some fundamental analysis and we said, okay, I want to at least enter some of the position today. It could be whatever reason you want it to be. But let's say that we said that, and then we kind of missed this first initial bounce up here in the morning. So what you could do at this time is place 2 different orders. One being a trailing stop buy order and the other one being a limit order. So in this example, maybe we set our limit order down here, maybe around that first little resistance that it ran into at 33.32. And then we set our trailing stop buy to, let's say, 1.5%. So what that does is that gives us a shot at trying to get that lower fill price down here. But then the trailing stop is going to trigger if the stock doesn't come down there and it reverses and keeps going. So that's really nice, again, if you know that you want to buy. We'll discuss this more when we talk about a sell signal, but you can also use a one cancels the other order. And what that'll do is if one of the orders triggers, the other one gets canceled immediately, so you won't get filled twice. So we can use about 2 days ahead as an example of how we might use a sell trailing stop. And so I do a similar thing. So I'll set a one cancels the other order with a limit order at a high price, maybe some sort of percentage target or something. And then I set the trailing stop sell order. And I found with some of these 3x leveraged ETFs that 2% is a pretty good level that gives it some more room to run without getting stopped out in any sort of break in the momentum. So if we had used something like that in this example, we probably wouldn't have got stopped out right here, and we would have carried on to the higher price, and hopefully our limit order would have gotten triggered then. So by doing the one cancels the other strategy and using the trailing stop, you're guaranteed to get your sell, and then you also give yourself a chance to get that little bit higher sell price. So one thing you probably noticed is that the amount that we set that trailing stop loss for is really important. And not all stocks move the same distance. So what you might use on the S&P 500 index fund is going to be very different from an individual stock or a leveraged ETF. So I recommend backtesting. You can use something like TRENDSPIDER and test a bunch of different trailing stop amounts and see which ones work the best for the assets you like to trade. So another way that I've seen people use the trailing stop is once they've entered an order, they set the trailing stop loss as sort of a safety measure just in case any unexpected downside happens. And this might feel like the smart and conservative thing to do, but a lot of the backtesting that I've done shows that if you take an otherwise profitable strategy and add this sort of long-standing trailing stop loss to it, more times than not, you're going to get stopped out when you didn't really want to. And this is why I recommend using them in conjunction with a buy or sell signal rather than just setting it as a sort of stopgap measure. So what I want to show you here is what happens to one strategy when I added a trailing stop loss to it. So I've set up a strategy using SOXL, which is a 3x leverage ETF on a semiconductor index. And it's based on the 30-minute time frame. We're using the MACD. And what we're going to do is enter a trade on the 6, 13, and 6 when that turns positive. And then we're going to exit a trade on the 9, 13, and 9 and the 6, 13, and 6 MACD turning negative. So those are the only signals involved with this strategy. I'm not going to get into a bunch of the specifics on how the strategy works, but it's a pretty good strategy on the 30-minute time frame for leveraged ETFs. You can see here it outperformed the index here double. So the asset buy and hold performed 300%, and then the strategy performed 600%, and that was over the last 2 years. So this is the strategy without any trailing stop loss. And what I want to do is I want to add a trailing stop. We're going to start with 3%, and then we're going to run the test. And this backtesting software is basically just running this trading strategy through as many past candles as it can. So in this case, it's 7,000 candles, which gets us back about 2 years. So you can see when I add the trailing stop loss, I get a net profit of 416%. And I'll show you here how 1% works. So if I add a trailing stop of 1%, I actually get a 500% profit, so closer to my 600%. But you can see I also had to enter 1,165 trades. So a lot more trades than if I didn't have the trailing stop. I believe I was under 200. Let's see what it was. Yeah, so it was 180 trades. And that's also because of the way TRENDSPIDER tests this. So if the conditions are still a buy signal, it's going to enter even after the trailing stop loss was triggered on the next day. And in this simulation, we're running trades by the next candle open. So what I did is I ran this for a couple different percentages for trailing stops, 1 through 10, and I summarized those right here on this graph. And you can also see the number of trades that you had to take depending on what you set your trailing stop loss to. So the takeaway here is that whenever I set any amount of trailing stop loss, it always made my trading strategy perform worse than if I hadn't used any sort of trailing stop loss. There are good times to use the trailing stop loss and some other times where it doesn't work quite as intended. So I don't like to use it as a safety measure for once I'm in a trade. I don't set a trailing stop loss and just let it go, because usually that's resulted in getting stopped out when I don't want to. And the backtesting shows that results are usually better when I don't apply a trailing stop loss. But what I do like to do is use the trailing stop loss when I get my buy or sell signal, or use it as a replacement for a take profit level using a conditional order that executes a trailing stop order once the stock has hit my take profit price. So I'd be interested in knowing if you guys use trailing stop losses, what types of distances you use, and whether or not you found them to be helpful in your strategies or if they have poorly affected your strategies. So leave a comment in the comment section below and let me know what you think. And that's it for this video. I appreciate you guys watching, and I'll see you next time. Thanks.